Archer Aviation is hitting milestone after milestone as we've seen their new test flight records, the Olympics to partnerships that we've seen, and recent funding surges. Pair that with the cleanest execution we're going to see in the recent urban air mobility market. Today I'll describe the numbers, the latest news, the key risks, the price targets, and whether ACHR is still a buy after all this recent news that we've seen. Personally, I think so. Archer, ticker symbol ACHR, is currently trading at $12 a share at the time I'm recording this. And one of the main things they're developing is an aircraft called Midnight, a piloted 5C electrical vertical takeoff and landing aircraft that targets 20 to 50 mile distances, and it has urban hops, and it really does great turnarounds. The strategic partners we have include United Airlines and Stellantis. And as Archer is building a network approach, its routes, vertiports, and training, it's all going to be able to make it so that it can commercialize quickly once the aircraft is certified. So we have had recently, we've gotten news of the record test flights as the Midnight aircraft reached 7,000 feet in September and completed a 45-mile flight at 120 miles an hour, continuing envelope expansion after an August run of 55 miles in 31 minutes at 126 miles per hour, which is very fast for helicopters. And this matters because reliability across speed, altitude, and endurance underpins certification data and customer confidence. One of the main things I want to point out to is also how quiet these aircrafts are. If you've watched the videos, you've seen the clips, they're very quiet. They're not a big disturbance, and they're honestly better than the helicopters we have at the highest level of tech now, made by Lockheed Martin and other companies such. So I think once this continues to get underway, it will be the standard for the helicopter industry and the aircraft industry, especially for these higher end of customers. And this is kind of the news that made me buy. I'll show you guys my position later, but this is kind of the main thing that got me there. Also, we've seen recently the Los Angeles 2028 Olympic selection, as Archer was selected as the official air taxi provider for the 2028 Olympics and Team USA, a high visibility proving ground with routes among key venues and support use cases. Pending FAA approvals, it's a marquee platform to showcase operations and the brand at a whole. Not only this, but we've seen the launch edition roll out abroad as Archer delivered its first Midnight to the UAE, begin test flights in Abu Dhabi, and expects initial commercial payments this year as part of its launch edition program. It also announced a third launch edition partner in Indonesia. Early adopter markets can generate operational data, and it will make us understand how the aircraft performs the revenue before scaling wide to the US, which is where the main market I think will be. Also, we've seen in recent months, we've gotten the Archer ended 2022 with 1.724 billion in cash and cash equivalents after significant capital raises, leaving it with sector leading liquidity to fund certification and ramp. I know there's other companies in the market, and that people have said that on the stock market at least, that this is the second biggest stock in the aviation automation air market, but I think it's really at number one with how much cash they have on hand, how much time they have to scale, and how ahead they are in commercialization already. And one thing also we've seen is that they raised capital of 300 million with BlackRock backed earlier in the year, and 850 million mid-year, helped by U.S. executive support for eVTOL development, and important signal for infrastructure and regulatory momentum, which shows the policy tailwinds and funding as they're continuing to diminish. It's only going to get better and better from here, and we're going to have a place inside the government, and they're going to be able to support us fully. Not only this, we've seen recently Archer closed at around 1160 on October 3rd, up 14% that day. And as I'm recording this, the market is pricing it still up. The options flow have turned active with calls leading puts recently, reflecting bullish speculation. Uh, Remember, news moves sentiment, but the investment case still hinges on the certification and production. So as we continue to watch this grow, watch for the production of these aircrafts, the certifications coming in, and stuff like that. Also, one of the numbers I want to point out is the cash and cash equivalents. Like I know I mentioned it earlier, but it's hard to grasp how much money like it is for a company like this where they're not producing a revenue yet. It's hard to create funds. They don't want to dilute shareholders. At Q2 2025, Archer had a multi-quarter runway to execute against certification, production ramp, and early developments with this 1.7 billion on the balance sheet. Not only this, but we've seen operating expenses um, are only 176 million and net losses of 206 million. So on a non-GAAP basis, total OPEX is 123.5 million and the adjusted EBITDA is negative 118 million. So as the quarter three, they've guided at an EBITDA loss of 110 to 130 million, which means there's going to be cash burn, of course, but they're well funded to pursue the milestones in the future, and I think we will not have to worry about dilution. Also, we've seen in recent talks, the CEO stated that 6 Midnight aircrafts are in production, 3 in final assembly across Silicon Valley, the Golden Line, and the Georgia facility that they have. Not only this, but we've seen the FAA is actively inspecting as part of the new production certificate process. This is separate from the type certificate that we've seen for the aircraft itself, but both are needed for scale and for wide term use. Not only this, but we've seen the FAA progress as Archer holds its Part 135 to operate an airline and Part 145, which is the repair station, and it has advanced pilot training approvals, building the ops stack for launch once type certifications lands. Not only this, but one of the main things that we're gonna have to watch here is the price targets. It's hard to price a company like this. I was trying to pull up models. I was trying to look into my own intrinsic calculator. I was looking at how other people, analysts, created their models, and it's hard to really create a model. My personal target in 1 year is $22 a share. But as we've seen, the street considers it a cluster around 13 to 13.50, with highs near 18. And some of the recent notes we can see is some big banks like Benchmark or Canaccord at 12 and 13 calling it buys or strong buys. For long-term framing, I'll put this into perspective for you guys. Morgan Stanley has estimated urban air mobility could be worth 1 trillion by 2040. Not a forecast for Archer specifically, but it highlights the addressable opportunity if the category wins. Not only this, I want to break down the technicals of the company. As I'm seeing on the chart here, after the surge to the low 11s, near-term resistance is roughly at that 1180 to the 1280 zone, and a break and hold above there opens room to test prior swing areas. Not only this, but support areas are around 850 to 750 from recent moving average clusters. As always, treat these as areas, not penny precise lines. Technicals here are secondary to the certification and production cadence that we're going to see in the next couple of months. So make sure you guys keep an eye on that and do not make that in the back seat. As we can see on the chart here, there is a lot of support though at this level that we're seeing on the chart. And one of the main things I think you're going to have to watch for is as they continue to develop, the FAA has limited precedent. I'm not only yeah, I should have said this is the risk. I'm not only going to talk about all the bull cases. There are some risks, of course. There's the certification timing risk, which is my main risk I've seen, and it's the FAA has limited precedent for these type of certifications, and timelines can slip. So even bullish commentators flag that 2026 is a more conservative window industry wide. Not only this, but we got to watch out for the scaling and the capex, which it's helped by the liquidity of Archer right now, but execution must remain tight through 2026. Not only this, but the category adaptation, because we got to account for how this will affect the infrastructure, public acceptance, route economics, and they all matter into making this a full serve product. So my take, I personally have been opening a position, as I said earlier, and once that news dropped, I was the first one buying on that day, and I just couldn't help up. So I started a small position of a thousand in it, and execution is compounding, the funding is in place, there's high leverage catalysts. I'm positioning myself as an investor in the company, and as we can see, uh, for long-term investors accumulating on the weakness, the low eights, the low nines, if offered, can improve risk reward ahead of 2026 and the milestones that we're going to hit. But traders can use 11 to 12 as a momentum trigger area with tight risk controls, and this is all fundamentals, not price. which should drive conviction in the next near future. So if you're investing as a long term, this is a great buy. And Archer is really checking all the boxes with the record test flights, Olympic platform, international launch program, sector leading liquidity. What else can you really ask for? Drop down in the comments what you guys think about this stock. Drop down any other stocks you guys want me to check out. And make sure you guys have a great day, and peace.